Hello and welcome to the CNBC TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, it's turning out to be a session where the Bank Nifty has given up a lot of the gains from the top, so it's just about flattened out at this point in time. But what stands out is that the Nifty is managing to hold with a gain of around 140 odd points. We have the mid-cap index, which is holding with a good gain of over 500 odd points. So there seems to be a pullback, but let's see what takes place with the Bank Nifty, because there seems to be some amount of trepidation which is seeping in there. Remember that we have HDFC Bank, which obviously reacted to its numbers and was, probably set the tone in terms of a lot of numbers. And now we have IndusInd Bank, which is at the low point of the day, down around 3.5%. While the net interest margins were stable for the third quarter in a row, there was some amount of asset quality pressure which came through this quarter, and I think that seems to be weighing down on the counter. Separately, we have Kotak Mahindra Bank, which is coming out with its numbers tomorrow, so that stock is down around 0.8%, a bit sluggish ahead of that. And ICICI Bank, that one is actually holding up, so it seems to be a tale of two cities, because both these counters are coming out with their numbers from the private banking space in tomorrow's, tomorrow, which is a Saturday, but we do have a special session tomorrow. But nonetheless, there is a divergent move which is taking place on both of them. We do have a lot of queries which are lined up in the next 30 odd minutes. We have Astha Jain, research analyst at Hem Securities Vaishali Parekh, who's the head of tech research at Prabhudas Lilladher, joining in to answer all of your queries. Astha as well as Vaishali, welcome to the show. Before we kick it off, just a quick hygiene question, and Astha, this one's for you. The banking space is now seeing a little bit of pressure. What is your expectation from ICICI as well as Kotak tomorrow?
Hi, good afternoon, Ekta. Good afternoon, Vaishali. So yes, talking about the banking space pressure, it is definitely there. And the major reason which we are seeing right now is the pressure on the net interest margin, which we are seeing across the board, as well as we are seeing the increase in the slippages that you have already pointed out, that the asset quality concerns are also now coming up. So, I mean, these two factors are really leading all the banking stocks on the downward momentum, which we are seeing right now. Tomorrow, what we are expecting from these two big banks, that is the ICICI as well as Kotak, is definitely we'll see some sort of increase in their profitability as well as the net interest income. But the main thing which we really need to see, and which is what happening with all the banks across the board, is that the slippages as well as the fall in the NIMs. Because what we are seeing that the banks, since they have to, really look after the mobbing up the deposits, because deposits are really going on the lower side for all the banks and causing a concern, and in that way they are increasing the interest rates also on deposits. So that is why we are seeing some sort of pressure on the NIMs. So we really need to see how these two banks are managing their NIMs in such a scenario. So we are expecting strong numbers on the profitability front, but we really need to look after the NIMs, that is net interest margin on both the banks, and then we'll decide the future future strategy for these two banks.
Okay, all right. Well, let's get in a couple of queries now. We have Madhvi, who writes to us from Visakhapatnam. She holds 50 shares of Tata Motors, which he's bought at around 289. She's a long-term investor, wants to know what to do, whether she should hold or she should exit at current levels. Well, Vaishali, sitting on a massive profit on this one. She's doing very well. She has a quantity of around 50 odd shares. What would you recommend that she does? She's a long-term investor. She doesn't mind holding on. Do you see further gains coming in for TAMO?
Very good afternoon, ladies. And yes, Tata Motors as a stock has been an outperformer in the auto sector and as a stock individually also. So I would say that yes, market is going to witness some whipsaws or the other, but in a current scenario also, the trend is very much intact. So I would say keep a stop loss of 780, because this is the range what we are looking at. 780 should be the stop loss, and if this stock is not really affected by the market whipsaws, in all likelihood this stock can go towards 860 levels also from here on. So that is the way I would look at this stock.
Okay, and what about you, Astha, Tata Motors?
So first of all, the result will be there on the 2nd February, I suppose. So we really need to wait till that time. But I think the way this company has posted their financials in the quarter gone by, it was amazing, especially on the front of Jaguar Land Rovers, that is JLR. We are expecting the pickup in the EBIT margins also. So that really need to be seen. And we are seeing some sort of volume increase in their JLR business. So this time we are expecting JLR business to really outperform on the consolidated level for this company, and that's why we are positive on this counter. We are recommending to hold the stock and wait for the results. Till then, what price target which we can attribute to the stock is 950 if everything goes well in the results. So yes, we are recommending hold on the stock with a price target of 950 in the long term.
Okay, all right, fair enough. So that's the word coming in on Tata Motors. That stock has given 100% returns in the past 12 months. It's really outperformed. Let's see whether it sustains or not. Ravindra Mooli now writes to us from Tamil Nadu, holds 50 shares of Safari Industries, which he's bought at 1800 odd rupees. And he's got 50 shares of Cann Homes, which is at around 700 odd rupees. So he wants to know what to do with both these counters in terms of an investment. He wants to know the future prospects of them. Well, Astha, let's go to you on this one. He's bought both of these counters mainly at the top. So what would you recommend? Fundamentally, do you think there's more to go on them?
Okay, so first of all, talking about Safari Industries, we are expecting this counter to post strong set of numbers, because what we can take from the management con call in the previous quarterly results, that they are expecting H2 to be better than the H1. So if that will be the case, then definitely they will post strong set of numbers. Although in the last the results also, due to their e-commerce sales and they got very strong demand. We have seen the jump in the revenues also. So let's see whether they will continue on this journey or not. But still, we are expecting this company to continue their strong financial performance, and we are recommending hold on this counter. The price target which I am setting right now for this counter is 2100 at the initial level. So hold is recommended for this counter. Now talking about Cann Homes, yes, for Cann Homes also we are expecting strong set of numbers. Although being in the NBFC space, one really need to look after that, the kind of results we are getting. But because management has guided for 2% ROA and the strong ROE of 17 to 18%, I think the company, if delivers such kind of numbers, then definitely it will be a strong case to hold the stock. So again, waiting for the results. Until then, recommending hold with a price target of 840 to 850.
Okay, all right. Well, what about you, Vaishali? What would you recommend on both these stocks? Because if you look at it from a 5-year perspective, big outperformers, would you hold on for more?
I definitely would agree, because see, the long-term trend, let's start with Safari. Long-term trend is really intact, and right now at 1908 levels, I think 1850 is a very good base. It has made a double bottom on the technical terms. So I would say this is a very good opportunity to, in fact, even add more, because I think once the trade is right, I mean, if the view set's right and we see a bounce coming from here on, I would be looking at 2200 levels as my target. And as far as Cann Home is concerned, I think that too is very well placed. It is undergoing a long consolidation period. So let's wait for a decisive breakout, and from there on, one can get a gain of around 10 to 15% at least to start with from here on.
Okay, all right. So that's the word coming in on a couple of these broader market stocks which have outperformed. Let's get in another query now. We have Shruti, who writes to us from Goa. She holds 5 shares of LTMI Tre, which she's bought at around 5,000 odd rupees, and she's asking if she can buy more shares or wait for the stock to probably correct a bit. Well, it's seen a significant correction post its numbers, but Astha, what would you recommend? Because, the management commentary pointed to a recovery maybe in Q4, but they were very, it was a bit cautious. When it came to the furloughs, they said they were wider and more spread out in Q3 from different sectors as well. So there is probably a little bit of caution. What would you recommend?
Yes, and what we have seen that consumer discretionary spending is also impacting the business, and that's why we have seen, apart from the higher furloughs, the kind of decision making which is getting delays on the client side is also impacting. Even not this company, in fact, the other IT companies also. So that is really the case, and in fact, the management this time they have not, given their aspirational margin band. So that also indicates some sort of, cautiousness on this stock or on the IT stocks as of now. So what I suggest that please don't enter into the stock right now. Let it fall further. Till that time, we'll get some clarity of the upcoming results. Then there will be a better chance to move, into the stock. Right now, wait for some more fall rather than entering at the current level. And if someone is into the profit, then even I would suggest to book some sort of partial profit on this counter, especially for the LTMI Tre. So I would suggest to book partial profit also and don't enter at the current level. I think some dips will definitely come and then there will be good opportunity to buy.
Okay, and what about you, Vaishali? LTI Tre, after that significant fall that we saw yesterday, would you recommend more?
So I would say definitely I am in sync with what Astha has been saying, because of course the trend is weakened, and now we see even the weekly chart and the daily chart. I think 5,300, 5,200 should act as a good support level. So from there on, one can start accumulating, because overall I think the long-term projection, what we are seeing, we are likely to see 7,000 for a long-term perspective. So I would say 52, 53 level should be the level to be watched, and that would be the level as far as the favorable risk-reward ratio is also concerned, to start buying this stock.
Okay, all right. So that's the word coming in on LTI Tre. Let's get in another query. Debraj writes to us from Bangalore, holds 2,000 shares of Ratan Global Wires, which he's bought at around 103 odd rupees. So that's a great investment he's made. He's asking if he can hold his shares for the long term. Well, Astha, this is the larger question, that so many people are sitting on such good returns when it comes to, say, select mid-caps. And the mid-caps, for example, are back in flavor today. But what would you recommend to somebody who's made such a good profit on a stock such as Ratan? Would you recommend to hold on for more, or would it just be prudent to take some profits off the table and maybe re-enter the stock at lower levels?
So one update from my side, maybe tomorrow this company will going to declare their results. So I think a matter of a day only. So definitely would recommend to wait. So now this Ratan Global Wire, they are into the tire bead wire, and they have a Thailand operations also. And what is positive about this company, which has led to the significant increase in the share price over last few months, is that their Thailand business is now turn around. It is becoming, completely turnaround business, which it was not few years back. So that is the major reason. And now the management, if anyone has seen their commentary in the last quarter, they were very much optimistic that they will outpace the Chinese competition also. And they are very much positive about their revenue growth guidance also of around 18 to 20%, along with the EBITDA margin of 18%. They are recommending to maintain those levels. So I think a strong management guidance along with, a completely turnaround business in some of their part is really indicating a strong future performance. And it is a matter of only a day, because tomorrow, I think 20th January is the date where they will be going to declare their results. So wait, at least one can hold till then. And I think one can remain invested in the stock if results will come really strong as what management has guided.
Okay, all right, fair enough. That point is taken. We need to take a short break, but as we slip into the break, the union budget is less than 15 days away. What is your wish list for the finance minister presenting the CNBC TV18 budget ballot? You can now share your budget expectations with us on our website by scanning the QR code on your screen or by logging on to cnbc-tv18.com/budget. Welcome back. Well, we still have with us Vaishali Parekh and Astha Jain to answer all of your queries this afternoon. Well, let's get in another question now. We have Aditya who writes to us from Hyderabad with an investment query. He says he wants to invest in Indian Railway Finance Corp or IRFC. for the long term, and he's asking if it is the right time to buy these shares. Well, obviously, the run-up has been quite strong, but Vaishali, coming to you on this one, what would you recommend?
Well, it's time, actually, technically, it's time to book partial profit. And if one has to buy, wait for a good, decent corrective move coming in this stock, because we've seen a one-way rally. In fact, we are pretty much close to our target resistance of 160, 170 levels. So I would say not in a hurry, but if by chance we see a good corrective move coming in and we see this stock coming towards 125, 130, that would be a good level to get into this stock.
Okay, all right. And what about you, Astha? Any views on the fundamentals?
I think the valuations are now overstretched because, it is going at the price to book multiple of 4 against the industry price to book multiple of only 2. So now, the valuations are a little bit expensive on the higher side because the stock has seen a huge jump just on one basis that the government has increased its capital outlay on infrastructures and railways, etc. And we are seeing the one-way momentum in all the railway counters because if we see their financial performance, it's not that attractive. So I think the stock has seen a major jump. It's better to book some profit at this point of the time because the valuations have also become expensive now.
Okay, all right. That point is taken. Yes, the valuations and the run-up has been strong. Let's get in another query now. We have Venkat who writes to us from Visakhapatnam. He asks if it is the right time to book profits considering the strong rally that we've seen in the market for some time. And he asks if the buy on dip strategy is the right way or approach to buy stocks. Well, ladies, both of you all are in a position to answer this because, that is the million-dollar question, whether or not somebody should be booking profits in terms of the rally that we've seen, partial profits and probably trying to re-enter at lower levels. Astha, you go first.
Yes, definitely one should book some sort of profit because if the horizon is long term, that is more than 9 to 12 months, then it's better to stay invested. But if a horizon is short term, then definitely partial profit booking is recommending. We are recommending that thing from our side because the market has seen huge jump, and the main issue is coming not from the India but from the US that they are seeing a long grind in the terms of inflation because it is not going down in any ways, and the hope of interest rate cut in the March is now it is seems to be very low. So I think there are certain issues, and in fact in the India also we have elections, so there might be some victory, traveling going ahead. So definitely profit booking is recommended from our side at the present level. And yes, buying on dip strategy is also recommended. So let the markets fall further, and there are always chances to enter into the market because long term we are still bullish on the market, keeping in view that funds will always get attracted towards the emerging market when there is a problem in the US dollar, and India is the major destination for that. So long term is prospects are intact for the India. So definitely long term markets are looking strong, but yes, in the short term some sort of partial profit booking is always recommended.
Okay, Vaishali, what about you?
Well, I would say actually, yes. If you talk about the basket on the whole, it is looking a bit heavy and profit booking has to be brought into consideration. But I would say it's always a stock-specific and a stock-specific market because if you see certain sectors like specialty chemicals, chemical sector, in fact, to that extent, even few of the IT stocks, they have not really participated. And assuming that these fundamentals are good in these stocks, we will see a rotational move. But yes, if you're talking about Nifty on the whole, or if you're talking about Bank Nifty on the whole, we have seen good pressure at these levels. We are in the overbought zone. So yes, if markets begins to correct from here on, we will be seeing a good corrective move. So yes, of course, a cautious stance is definitely recommended.
All right, fair enough. So that point is taken. A cautious stance is recommended, maybe some amount of healthy profit booking. Bhavya Chawla writes to us from Pune. She holds 600 shares of Ircon International, which she's bought at 184. She's a short-term investor, so she wants to know what to do and wants to know the selling price or what exactly should be maybe the stop loss and, the target for this particular counter. So Vaishali, over to you on this one.
So, well, like all the other railway stocks, this too has done very well. And again, not to mention that, yes, it is also in the overbought zone. So I would say continue holding the stock with a trailing stop loss of around 200 levels, because if the momentum still continues, we have a projected target open for 240 from here on. So a trailing stop loss is a must, but hold, because it still shows strength.
Okay, all right, Vaishali, as well as Astha, thanks very much for joining in. And I wish I could say, have a great weekend, but we are working tomorrow. So see you tomorrow and have a great partial weekend, I can say. Well, that's all the time that we have on the show, but do remember to email us your queries and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.